We'll be beginning in about 1 minute, so stay tuned. Okay, let's get started. Tonight's webinar is on health insurance, and we're going to be talking about it from a group point of view, from a benefits package point of view, from the exchange, which is Obamacare. You may know it as that. You may know it as ACA. So we'll be discussing that. We'll be also talking about off the exchange. So these would be like the Obamacare alternatives or the ACA alternatives. Also short-term plans. We'll be discussing those. We'll be discussing health supplements and why they are important from a insurance standpoint for you and your family. If you have questions or wish to discuss further, please go to our website, kansasinsuranceagency.net, and you can schedule an appointment there on any of the tabs. You can also give us a call at 662-292-6271. You can also search for us on Facebook, looking up Ken's Insurance Agency, or looking up Kenneth Sigler in Hernando, Mississippi. You can also find these recordings on YouTube on our agency YouTube page, Ken's Insurance Agency, LLC. So that gives you a little bit about us. Feel free to check us out. Feel free to talk to us. We are an all inclusive insurance brokerage. So we can actually help you with insurance, all your insurance needs. When it comes to group health plans, which is a key part of a benefits package, you're talking about basically spreading the risk of the health insurance among a large population, which would be the company. So to do a group health plan, we have to see everybody in the company. That does not mean everybody in the company has to sign up. Some may not want to. Some may have coverage through their wife's work and not see the benefit of having the coverage. Group health and benefits packages are generally deducted from the payroll, so the company pays the premiums up front. They get reimbursed by deducting it out of your paycheck each week or each month. So that's how that works. COBRA is a special option. We do not recommend you take COBRA. One, the premiums are usually double to triple what they would be if you do not take it and come to somebody like me. And basically, COBRA can be even a stripped down version of a health plan to where it doesn't give the same coverage, although they say it's supposed to be the same coverage. So it's very difficult. And if you take COBRA and then come to somebody like me because you don't want to pay for COBRA, I can't put you in an exchange plan if that's the best plan for you till you finish COBRA. So that's why I tell you first, let's sit down and talk. Let's see what's best, because you do have a timeline, but we can easily see what's going to be best, what's going to be in your budget within that timeline so that you know what you want to do. Health supplements, as far as a benefits package for an employer, these can lower your workers' comp rate. That basically having a benefits package makes you more attractable as an employer to potential employees. Also, it gives employees a reason to want to stay at your company and work for you when over other companies out there that they could work for. Things that can be included in a benefits package or in health supplements are accident, telemedicine, critical illness, cancer, hospital indemnity, disability, even a gap policy can be included. These are the main ones. We're soon to get a new one that would be telecounseling. These are all good things that can be included in a benefits package that are also health supplements. Some others that can be included would be our financial package, roadside assistance, prepaid legal, identity theft protection. These all can be included in a benefits package also. but they don't have really the health standpoint. Um, and the more you have in your benefits package, the more attractive you are as an employer. We do not recommend basically doing a blanket throw out of a benefits package where basically you say, okay, here's all we got, take what you want, because most employees are going to buy everything, and then basically halfway through the year they're going to want to drop half of it because they're not happy with what's coming out of their check. Basically pick about 3 products, roll those out, let them pick from them, and then basically every renewal do 3 more products. That way they get acclimated to the products, they're happy with what's coming out of their paycheck, and it makes it easier, and they're not basically fussing over what it is and then dropping it at renewal or quitting and going somewhere else to basically fix the problem. On the individual / family side, you have the exchange, which is Obamacare, which is ACA. You may know it as either one of those. This takes into account your income. So it's going to be gross income for the whole family that's living under the roof, the total number of members living under the whole roof. So if you got grandma living under the roof, you have to count grandma, whether you want to or not. Now, grandma don't have to be covered by it, and probably wouldn't be covered by it. She'd be covered under Medicare, which we could help her with. But she would be but she does not have to technically be covered by the same plan as the family. Some things that may help also is if you got children, depending on your income level, you may qualify for CHIP for the children, where they're covered under basically a special division of Medicaid instead of actually under the exchange plan. That can help you save money and make things better for you. So it takes all this into standpoint. The premiums are calculated on how many you think are going to be covered, and then as we fill out the paperwork, they can go up or down. I have seen where basically people tell me they got one income level for the year. We get into the paperwork, they're coming up with other income, and that's when it can actually become very expensive. I've also seen where basically they didn't come up with any more income, but we found out basically one family member would qualify for, let's say, CHIP or something else. And so that family member came off the policy, and basically they went from having maybe like a $98 premium a month to having a $0 premium a month. So the exchange can be affordable, but there's that narrow window where it's affordable, and then beyond that, you're looking at around $700-800 easy, and it can even be over in the thousands of dollars. So basically, it's best to be upfront with us upfront so that we can narrow it out before we get into a lot of the paperwork and then find out that it's not affordable. We do realize that you may forget, so we don't get upset if you forget, or if basically income comes up. We just basically take it and run with it and see what they say. Oh, excuse me. The next thing is the alternatives. The alternatives meet the ACA requirement for the tax penalty so that you wouldn't be faced with the tax penalty. They are considered full coverage. It's considered essential coverage, but they are not in an actual exchange plan. These plans have exclusionary periods for pre-existing conditions. They can rate up because of pre-existing conditions. They can ask about pre-existing conditions. So you'd have to be upfront with us about that, because some of them will have a 12-month wait, some will have a 24-month wait. We even have these for companies, and basically we don't try to exclude a member. In fact, we cannot legally exclude a member, whether we're doing it as a group or individual coverage, from coverage. But we do try to use what you tell us to exclude plans. You may have a plan that you want, and it may not be the best plan for you because of a pre-existing condition and that pre-existing condition clause. So that's where we have to show you that. And if you still want it, we'll move forward. But we're going to let you know there is this pre-existing condition clause. You won't be covered for this period of time, and you're accepting that. When it comes to short-term will not cover pre-existing conditions unless the pre-existing condition happens within the term and then is only covered during that term. So like if you have a short-term policy, you have a heart attack, the heart attack and its treatment will be covered for the period of basically anywhere from 3 months to a year, and then basically after that, you're looking at coming to an alternative plan and having to wait 12 months to 24 months, or you're going to an exchange plan. There are religious concerns revolving around the exchange plans. What we as an agency try to say is, one, if you have a problem with like the birth control side of it from a religious standpoint, then just don't use that side of it if it's going to be the best plan for you. Now, if you are dead set that you don't want it, we won't quote it, but we would recommend that you consider it if it's going to be possibly the best. But you do have the right basically to refuse those kind of treatments and stuff from a religious standpoint. Health supplements on the individual side, these are doing basically like they do in the benefits package. They put money back in your pockets. They are billed monthly instead of taking out of your check each week. Which basically it could come out better for you coming out of your check each week. But they tend to be very affordable. They put money back in your pocket. They help cover you. They're anything from an accident plan to cancer to critical illness to dental to vision to disability, which with disability you have to have a job. And we have to list that job as far as its industry. And with disability, your industry does help determine what your rate is. A more dangerous job, the more your premium's going to be. Again, if you're just tuning in, check us out on YouTube, Facebook, our website, kansasinsuranceagency.net, or give us a call at 662-292-6271. We'll be glad to give you more information and help you out with this. Feel free to give us a call. And have a good night.